Ooh. Man. All right, good morning, everyone. Let's get started here. All right, last night's session in the States, a bit of an odd setup. We had really most of the sectors and most of the markets not having too big of a move on the day, but really just taking a beating on the tech sector. I think that the market, for the most part, is really chalking this up to selling ahead of the Alibaba list IPO and just making room for it in some of the stocks. So not just being specific necessarily to the e-commerce stocks or the Chinese tech stocks, but also kind of getting more broad selling, especially on the social media side, but just in some of the tech high flyer names maybe being dumped in order to create room for the IPO. So, yesterday we didn't have a whole lot going on. We had some economic data, New York Empire State manufacturing number, or New York state numbers that came out that were the highest number in 5 years, but manufacturing output declined for the first time in 7 months. I don't think it was necessarily due to market data or anything like that. We did have Morgan Stanley that gave a kind of a mixed view on Tesla Motors, and Tesla in particular got absolutely hammered on the back of it. But just all of the tech space was really under real pressure, and I think most of the market chalking it up to selling ahead of the Alibaba IPO. We also had locally Naspers that was really heavy here yesterday, kind of unnaturally heavy from what you would have thought it would have been, and probably the same sort of reason, probably just some selling still ahead of the IPO there. If you look at China, if you look at Asia, you can see we're down pretty much across the board outside of the Kospi. We have a couple different things happening. We did have some numbers out of China showing that foreign direct investment is continuing to fall, and that's just adding to that sort of theme that things are softening. Did have some of the real estate developers that managed to get a little bit of a bounce in the day, but other than that, there's really not a whole lot going on. And Sydney, there's a lot of concern that continues to grow at the moment, particularly around the iron ore price just falling off a cliff. And I mean, that economy is so heavily pegged specifically just to the iron ore price that a lot of people are worried that that it's going to really put a damper on the Australian economy, and that they actually have a housing bubble there potentially. If I'm not mistaken, at the peak of the housing crisis or the housing bubble in the U.S., the average house costs 5 times what the person, or the average house was 5 times the price of what the person who was buying it was earning in a year. In Australia, it's over 7 times. So just to give you an example of how expensive their housing market is, I don't know how sustainable that one is. Moving on, chart of the day here. Carrying on with our Chinese weakening theme, this is cement production going back for the past 6 years. And you can see here that we're really starting to get back to crisis levels, 2008, 2009 levels, when we really dropped off the deep end. You can see there in 2008, before they put the stimulus plan into effect in the beginning of 2009. We're right back down at those same sort of levels, and I think that's a great little statistic that goes to show you that the demand for building materials and things like that just dropping off a deep end. Obviously, one of the reasons why you're also seeing so much pressure on iron ore. All right, no corporate action really to speak of today. If we look at market data, we've got the UK numbers early this morning that include CPI, that includes retail price index, and RPI, PPI as well. Then we've got the ZEW numbers out of Germany, and ZEW numbers and across the Eurozone, in fact. And then later in the States, we've got PPI, final demand, net long-term TIC flows, and total net TIC flows. So I don't think there's a whole lot of data that's really going to get things moving today. The ZEW numbers have been reasonable to watch, but other than that, I think we're going to be sitting around waiting to follow some trade action on the day. All right, let's get into the maps. All right, first thing we're going to have a look at is we talk about some of the high flyers in the States that came off the boil yesterday. We had some of our high flyers here that have come off the boil in the last couple sessions. We'll start it out with MTN, which has been in a hell of an uptrend for a long period of time. Obviously, we talked about this the other day. We talked about the breakout that we had above the long-term uptrend and how things had really just started to get vertical, and how most likely that was we're going to get a nice retracement back down to that line. Well, we've officially got that retracement. We're down at the top end of the range. I really kind of expect these things to correct further, obviously, to get back into this band over time at least, but at least we've gotten a correction down to there. If you also look at Remgro, Remgro is one of the same ones where, let's shorten this up a little bit, but Remgro has also been in a really long uptrend here where we really were breaking out from the what was a very steep trend line and what still is a very steep upward sloping trend line. We've at least kind of fallen back sort of into the middle of the range here. Maybe a decent little area to buy once we get into the bottom end of support on this little uptrend. But some of our stocks are just getting so vertical, so steep, especially the MTNs of the world, and we've gotten a nice little retracement, which bringing things back maybe into relative normality here. All right, next one we'll look at is Barlow World. I only noticed this kind of late yesterday. I should have shown this one to you guys yesterday earlier, but we really broke down. I think we broke down on Friday's session. In Barlow, if you look at that, it looks pretty clearly defined to me that we broke down from it on Friday's session. And you can really see a kind of a little broadening formation that's been going on for, call it 4 months. And we've really dropped out the bottom of it yesterday, closing a touch below 95. I think that this is going to take us on a target of all the way down to $90 in the near term. So I think there's more left in Barlow's. When you think about it, the scenarios that are playing themselves out, the weaker rand, the low demand for mining equipment and that sort of thing really should be putting pressure on Barlow's anyway. So I think the fundamentals kind of seem to be matching up with the technicals here. Those are always nice ones to play. Maybe look for a move down here, another 5% down to around the 90 level in Barlow's. All right, let's look at Vodacom. Vodacom, I wanted to show this one. Kind of everyone's been asking me, where do you buy this thing, and where's the level? This has been one of the choppiest charts I've ever seen in my entire life. This thing really just, if you look at it, I can't even just show all the ups and down moves. These things are moving in clips of, this thing moving here from 112 to 128, and it does it in about 2 weeks or something like that. Then it literally goes straight back down to 117, then another week later, the thing's back up to 133. Then 2 weeks later, it's back to 160. This thing's moving around at 15% clips, just vertical back and forth. Anyway, bottom line is yesterday we hit a little bit of trend support. It's hard to find a real technical level here, but you can see there, right around 126 is the number there. We hit a little bit of trend support there intraday. We got a nice little bounce off of that. I would kind of use that maybe in the short term as maybe a place to nibble. Remember, this thing does get it gets steep either way, and it has real big rips in either direction. So once it kind of makes the turn, it does start to usually move hard in the other direction. So if you get involved there, be a little bit patient with it. It might give you a lot of money quickly. If you look at Old Mutual actually, I was just looking at this morning, and it kind of dropped a little bit of a head and shoulder here. If you look closely, right around there, and you can see here left shoulder, right shoulder, and then obviously the head up here. So that gives us a target down to, let's just measure this out real quick. Call it, gives us a target of about 1 Rand 30 lower from this level that we've dropped, which is at 34.96. So we're really not looking for a big target, maybe just down here a little bit below 34. And then that may be a little place where we can own it. after that. I think if we complete that little head and shoulder and we get down to about, call it 33.75, 33.80, somewhere in there, might be a little place where we can actually have a bit of a nibble on All Mutual, but the chart starting to look a little bit less and less bullish lately. All right, and Tiger Brands, the last one I'm going to show here. Tiger Brands really dropping down to test support from where we broke out from. We kind of made this little triple top, or it was looking like it was going to be a triple top, and we obviously dropped out the bottom of that. Broke through the top of that on a couple weeks ago, and kind of just flagging right back down into that support level. So that level is going to be key. We're going to have to watch this one closely. We have seen a couple stocks, a few more stocks recently give us some false breakouts. There's 316. That's going to be the level we're going to want to watch in Tiger Brands. If we do get below 316 and can really push below 3, we're going to really need to see a close, because yesterday we got below it. Obviously we've reversed above it, but this is going to be a big level for us to watch around. The target's still definitely higher, still probably up closer to $330. And we'll watch this one closely. 316 is going to be a big level, and if we start to push up above this flag pattern, we're probably going to see 330 sooner rather than later. And that's it for today, guys. Thanks a lot.